Hello everybody, my name is Thor Young, I'm a moderator at Bear Bull Traders, and this is Thor Trades. In today's session, I'm going to cover a little bit different of a topic today. I had a really nice trade on Facebook that I took around 2 o'clock, and it was after I had had a bit of a conversation in the BBT chat room about a certain subject in trading and how we kind of manage our thought process. So today's session is going to be about why it's better to be a good trade manager than a good trader. Now, why I'm saying that is most specifically this. A lot of us spend so much time focusing on getting the perfect entry that we most often miss out on what is otherwise a really big move because we get a little narrow stop out or something happens. And this is the problem that we tend to encounter all the time. So being a good trade manager means that not just necessarily that your entry is going to be precise and then you're going to partial correctly and all of that. It means being aware of where your entry is in relation to the overall stock price and being prepared for larger or smaller pullbacks. Being a good trade manager is also about not getting stopped out, and it'd be better to use a larger stop with the anticipation of a larger move than to take small stops and smaller moves, because you're going to inevitably just get stopped out a lot as the price action chops you up and down. So there's an analogy I'm going to throw in, and then I'm going to go over to the trade and show you what I did on Facebook today. That analogy is one of using any kind of weaponry that's out there. I'm talking bows and arrows, guns, paintball guns, BB guns, whatever. I think we'll all have a very similar experience here, which is almost anyone who picks up a rudimentary weapon of any kind is almost able to be successful with it instantaneously at hitting a target. So for instance, you put a target out there, sure, that's really easy to do, and it seems like you can instantly hit that target, but what's difficult? Hitting the bullseye, right? So hitting a target seems to always be so easy, and hitting a bullseye always seems to be so difficult. And that's the difference between someone who's just recreationally shooting a weapon and a marksman. Right? But in stock trading, you don't need to be a marksman. All you need to do is be able to hit the target. And if you're a good manager, you'll still be able to be consistently profitable, even though you're not taking the most precise of entries, because inevitably it's about managing that trade once you're in and not necessarily getting that pinpoint little position before you get in. So with that in mind, let's go on to Facebook and I'll elaborate a little bit more on that. So into my Facebook trade here, you can see that we're on my account and that we're loaded in here and we're getting things going. Facebook had a very interesting day. It actually had a pretty decent sell-off and then had a really big rally that happened around 11 o'clock on some pretty decent volume and inevitably made it up to pre-market high before it topped. And if you notice, it did kind of this interesting descending triangle pattern, and then it just absolutely tanked. So after it fell off on all of this volume, I saw it come down in here and it hit this 251, 252 level, and it started to really smash up a little bit. And then so let's get into what I'm talking about here when I talk about being a good risk versus a good reward. So, or should I say hitting the target versus hitting a bullseye. Now, ideally, you may have said, we got this in here. Stop loss for me, I actually had it set well below here, below pre-market low, giving me a very strong support level. This blue line here, I actually pulled off of from yesterday. You can see here we had this descending 3 touches here on the 5-minute before we moved up shortly after. So I saw that as a potential support. And sure enough, the price came down into here, and if you're looking at the VPA from it, we sold into it on good volume, and then once we hit it, the volume just died, and we get all these small, squishing little candles, and then we start having these breakups on the ranges. So for me, that looks like it's stopping. There's a ton of support here. It's having a lot of trouble selling through, and then inevitably we broke up here and started making a good move. So why I'm saying that it's more important to be a good manager than a good trader is there are certainly some better entries I could have had on this. I could have gotten in lower. closer to the bottom of this range. I could have waited for this break up and got in on this consolidation at VPOC for a breakup with tighter risk versus reward. But what I did is I saw that we had this strong support level. So my original stop loss was the loss of 251.80 in pre-market low. So it was like 251.75. So I held all the way through up to 253 for my first partial, 253.52 for my second partial. You can see here down in my my position here, I'm still carrying. I have 161 realized in this position, and I'm still carrying $80 in unrealized here to see if we're going to hold here. If we lose VWAP and come underneath, I'm probably going to go all out. It'll be a $200 trade at that point, which will be fantastic. If it manages to hold this 253 level and push up, then I'd like to get another partial somewhere back up around 254. So as you can see what I'm talking about, it's not necessarily about being perfect on your entries. What it is about being patient and waiting for those right opportunities for it to return to that level that you know you can use, and then set it. And look how wide my stop was. There's nothing tight about this stop. I used my I think I bought in with I think this was an $80 trade or a $100 trade, something like that. I bought in using my hotkey. Thank you, Kyle, as always. And then we moved up here and we got some great partials. So anyway, that was the main thing I wanted to talk about today. I wanted to talk about making sure that when you're trading, you're not too focused in on the micro. You know, use the macro. Look for larger levels, bigger spaces, and trade those larger levels. Think of it, you know, we're using momentum here, but think of it as an intraday swing. You know, you're not going from day to day, but think about like you're going to go from hour to hour. You know, you're not just looking for a good, especially when you're trading afternoon. You know, in the first 5 minutes, 15 minutes ORBs, we don't have to worry about that. We can go all volume, all momentum, all L2, easy, crank it. But when you get in these afternoons, use these larger levels, spread things out a little bit, and make sure that you can endure pullbacks, because the market's going to have pullbacks that are going to hurt your position. Too tight of a position and you're going to constantly get stopped out by these little bitty pennies, and it's just going to be super frustrating. So I hope that helps everybody today. I hope you all have a great day. If you happen to like this video, feel free to subscribe to the channel, ring the bell, and throw me a like. I'd certainly appreciate it. Thanks, and as always, keep it green.